Everybody, we're about to start the live trading session of the Good Vibrations webinar. So I see there's quite a few people still joining us, and we'll start most probably in the next minute or so. So please be patient, it won't be long, and just want to check a couple of things while I'm talking to you. Yes, so there's still quite a few people coming in, so we'll kick off in about a minute's time. So we're going to be trading the Good Vibrations system today exclusively, completely just going to be complying with that particular system. And I see that we have in the room mainly, well, people that have bought the Good Vibrations and that are familiar with it, and we also have some guests that have never seen it before. If you've never seen it before, just give it time to sink in. Don't be too over anxious to learn it immediately. What I'm going to do is I'm going to send you, the entire audience, a summary of what's going to happen today. So I'm sending that off straight away right now, and that will basically summarize the chart setups and all those kind of things that people normally ask questions about. So essentially what we're going to be doing is we're going to be going through this process here, which is on page 11 in your guides if you have those available. If not, no problem. I'm going to have it on the screen, so you don't need to worry. And it's a very simple process. We're going to be trading this process here, and this is how the good vibe. And with the franc in particular, I'm going to be trading most probably a slightly more conservative than just 150. I'll explain how 150 fits into the whole system. Essentially 100% is the good vibration, or the good vibration rate, and if you think there's a little bit more risk in the market, then you go to 150, and if you think there's a lot of risk in the market, you go to 200. So I'm sticking with the 150 strategy today. We're trading about 12 currencies, so you'll see them as they appear, and at the time of day we can't do anything about. We're going to be trading the early European session. It's going to be a bit of a rough session there. Just looking at our announcement schedule, we have a number of announcements coming up. We've got the pound in an hour's time, then we have it in 2 hours time, another pound announcement, then or a euro announcement, and then half an hour later than that we have another announcement. So there's a bit of a rough time we're going to go through. So we just got to watch the pound and the euro round about those announcements. They could drag other currencies with them, but we'll just be cautious around those times. Okay, let's have a look at so that covers the time of day. So what we're going to do is we're going to be working with bar charts, and all we're going to do is we're going to determine the vibration rates, which I've already done for us, and then identify turning points, and then place pending orders at those turning points. And then in my case, I'm just going to put a stop in. I'm not going to put a target in. I'm going to enter the stop at the same time as the pending order, and the pending order will be to trade against the trend directly, and when that activates, just leave the transaction. And I'll also be putting in a following stop, which is going to be half of the vibration rate that I'm going to be using. And that's the system. I think when you see the charts, it'll all start making sense. But we'll come back to this formula as I go through the trading. Okay, so there are the charts that I'm going to be using today. You can see quite a lot of movement there. Essentially, as you can see, they are bar charts, very simple bar charts that we're using. And the other thing that I have in here are lines, just to determine the dividing line between the hours. So this hour that we're in right now is the first hour of trading, which would refer to that 62 number, which is the vibration rate that I'm going to be using. And the 53 would then refer to the next hour, and the 59 will refer to the next hour. The 52 is where we're coming from. This little red line I'll explain to you well, I'll explain to you right now, because what I'm going to do is I'll actually put this order in as we are speaking. The vibration, the whole system of the vibration rate, as you've seen earlier, is to identify a turning point. Now I'm just going to quickly identify the turning point on this. That's most probably around about there. That's a turning point. The price has bounced there and turned, and we then put a pending order 62 pips away from that turning point. And how I do it is I use a trend line. This is nothing else than a trend line, and if you look to the right of the trend line, you can actually see the trend line gives you the number of pips that it has traveled from the starting point, and in this case you can see there's 62. So I've established there's the turning point. Let me make it a little bit bigger. Our stage, there's the turning point. There is 62 pips away from the turning point, and what we want to do is we want to put a pending order trading straight back into the trend if the price gets to that particular point. So that's what I'm going to do. With MetaTrader, all you do is you click on the area that you want. I'm putting a buy limit in there, and in it goes. I'm going to be trading one lot. I'll trade one lot, one mini micro lot, I think it's called, one micro lot per deal. That will make the calculation of our pips quite easy, and there's our buy limit. It's in. I can place it. I've got no stop in place yet, but I'll put that in later. Why is it so slow? Because it is most probably tea time at the brokers. And I'm going to put a stop in right now. That's where my stop must go, and that stop will be a sell stop. So I'm putting that in. Right, sell stop. Boom. Place. Okay. So now what I've got is I've got a order that says if the price goes to that level, I want to buy it, and there's my stop. I'll come and clean the stop up. I don't like using stop. It's just a lot faster using the stop. And this little red cursor, that trend line that you can see here, is 62 pips long. So what we're saying is that the price moves 62 pips, it will get exhausted and trade the other way. Okay, so let's have a look at the next currency, and we don't need to put a trade on the other side yet. There's no fixed turning point yet. There's no established one. The previous one was around about here, but that's a bit too far away out of our reach, and there's no major turning point there. Okay, so that's the euro sorted out. I'm going to go just through every currency, and that's the way the system works. Okay, let's have a look. Questions I'm going to be dealing with as and when there's an opportunity to deal with them, so don't get too frustrated if I don't take notice of the questions. I can only do so much at one time, and this is, after all, a live trading session and not a support webinar. So let's go to the pound. Same kind of story. Now I'll show you where these rates come from. They're not. This is not a special program. I've just actually typed those rates into the onto the chart. So I've got to look for 60 pips. So here we are. Let's go. 60 pips. That's where I can. Same situation. If the price goes there, I want to buy it, and then I just click there where I am. Trading. It will be a buy limit, and in she goes. and then I'm going to put a stop just to make sure that there's no, I mean, after yesterday's 1,000 pip run on the franc, you don't want to be trading without a stop. So we'll put the stop in there at, and that will be, this is a buy limit, so it will be a sell stop. Okay, there we go. All right, so we've got our first two transactions in place, and let's move on. And if you want to see the orders, we'll put them in. There they are. Okay. Right, let's have a look at this one. Let's find the first thing is to find the turning points in the market. Okay, there's the first turning point. We need a strobe of 42, so that's what I'm going to do. Get a quick thing of 42. There we are. In it goes, and oops, not a trend line. I want a. Oh, it's because it's active. Let's move it again. 42. Trading. We want to put a buy limit in there. Okay, buy limit up there, and we then want to put a stop just in case it doesn't listen to us. We want to put a stop right there. Okay, if it doesn't make sense to you, don't worry. Neither does it to me. No, I shouldn't say that. I'll explain everything as we go along. So this is a retracement method. It says that if the currency trades and reaches a certain point, it's going to get exhausted and it will vibrate back to where it came from. That's what the good vibrations system. I'm rushing a little bit because I want to get the orders in so that we can chat later on, and I'm just bringing this from yesterday, so we go like that. I don't need to repeat if it's right. So this is the yen we're looking at. The yen needs a 22 pip. There we are. There's the turning point. Clearly the turning point on the yen is over there. I'm going to go back and just revisit these turning points, but that is a turning point on the yen. We want a buy order when it reaches that level. Buy limit. In it goes. Come on, go markets. This is a live account, and that is why it most probably is taking a lot slower than they do. I think they have broken. They wait for a while. Let's put it that way. All right, so we need to put a stop in there, and the stop is. And people are asking, well, you know, what are those values of the entries? I actually don't know. You can see I don't even know what they are. I'm just going by the places. I'm not even worried what the actual values are. Values are shown a little bit down here. Okay, but nothing much is happening. Okay, what's happening here is we have two sets of turning points. We have a turning point at the top and a turning point at the bottom. Now, just so we've dealt with the turning point at the top. Now there is a turning point at the bottom. Can you see it? It's over here, and the same principle applies when the price reaches its vibration rate at the top here. We want to sell it this time. So so we go up there. And we go, not that, we go, that's the area, trading. We want to sell when it gets there. So in it goes, Right, so there we are. So now here we've got the, oh, I've got to be close to the selling point. That's why it's gone green. Okay, so we want to sell that, and then we just need a stop to prevent a runaway situation here. So we're going to put a stop at that level, and it will be a buy stop. Right, I'll clean the stops up. I don't like using buy stops. It's just to make sure that we don't get caught with our pants down. All right, so we've got two bouncing points for this currency. Those are the two bouncing points, and we have our orders in place. Okay. I'm getting some people giving signals of not hearing properly. Difficult to ask a room of 100 people, can you hear me? You're going to get 100 yeses. Don't know how to ask that question. I'll just move on at the moment. I'm sure the sound problem isn't too far. Okay, confirmation that the sound people are hearing me absolutely perfectly. Okay, so we've done the euro. I'm working my way down the around the currencies. Let me explain the currencies while I'm doing that. I've got four families of currencies. The one family has the USD as the second currency in the cross, and they should act in the same way. You can see their profiles are more or less the same. Then I have a group where the USD is the first currency, so they also in a type of family from that perspective, and they should also act in the same way. And you can see the profile of the franc and the profile of the CAD more or less the same. You can see this downward and a little bit of a thing there. So they are acting more or less the same. And then this group is where the yen is the second currency, and again you get a very similar profile coming out there. And then these are the more mixed ones, the more exotic ones, where we have a mixture of major crosses. So these most probably they do form a sort of a hedge sometimes towards the USD crosses. I see I've lost connection on my server there, but I hope it comes up again. Let's just see. Refresh. Oh, there it's up again. Okay, so that gives you a bit of idea of the currencies. The selection of the currencies are really just the major USD crosses. There are the three the majors, then the major yen crosses, and then here we have just a handful. I won't worry too much about these at the moment. Okay, so let's have a look. We were in the CAD. We're going to do the same thing. There are two turning points on the CAD here. I'll just open it up a little bit, make it a little bit clearer. They're very condensed at the moment. They're coming out of the Tokyo tunnel, so that's why this is like a Tokyo. And we say that the vibration rate here is city. Now I'll explain all of this. Don't worry if you're a little bit confused and you don't know what's going on. To see a system like this for the first time. Okay, so that's quite a big. We might not have any trades today at this rate. The market seems to be consolidating a bit. So we want to put a buy in. If the price bounces from there to there, we want to put a buy in because that's where it will get exhausted, and we think it will get exhausted trading, and we want to buy that. I must just explain, normally you would put your stop and your target in. Now I'm just being lazy and I'm putting a country entry in. If you see too many entries for a particular currency, it's just because I'm doing it very quickly and I'm just putting a sell order there. That sell order is doing the same function as a stop, so don't get confused about that. This is in fact my stop, that is my entry. Okay, so where we then we've got to do this one upwards. So we've now done that one down, so we've got to put a sell order at that level, and we've got to put a stop at that level, which will be a buy stop. Okay, there we are. So we've covered the franc. Now let's go to the that was the yen, or the CAD rather. This is the franc. Oh, that was a what, not 700 pip move. No, 800 pip move there. Quite impressive. Some of our traders put it in and went to sleep and woke up very rich in the morning, but I unfortunately wasn't in that one. All right, so 39 is what it will be. Now these numbers are calculated on 150 strategy. 150 means that I'm taking 150% of the normal vibration rate into account. So I'm going to stick with this. It doesn't look like it's really that worried, the franc. So let's just see what it looks like. What does that 39 look like? 39 looks like that. So let's go for our turning points now. So our turning point at the moment at the top is there. So all the system does is you have to identify turning points, put pending orders, one vibration rate away, and then put a stop in. And then you can go back and put a target in when you are more relaxed. Okay, so there's our sell limit, goes in there. Don't, you know, a lot of people are getting hang-ups about these stops. They emergency stops. When the transaction activates, I will replace it with an actual target and an actual stop, and I'll delete the stop. At the moment, I'm just doing emergency stuff. So don't worry about double spreads and all those kind of things, and adding the spread, and you know, it's no real time for being. You can see that the emphasis is really on getting the orders in, not getting everything 100%. So let's just do a buy limit there. Okay, and that's all I focus on. I mean, I don't really worry about all the other stuff. And this is a live trading event, so we'll deal with that. So that was a buy limit, so we need a sell stop. Okay. All right, so that's this currency sorted out. There, the bouncing points. There's the entry levels that we want to go in on, and that's the franc. Right, so it shows you we've done 6 currencies now, and we already halfway into the trading session. I'm a little bit slow. I'm going to jump to the pound, the euro pound quickly. Just check what it's up to. Oh, it's also very slow. So we've got 31 as the bouncing point here, and as new highs get made, whoops, we will change these entries. So that becomes a buy limit. Okay, and let's just get the stop in. Now I'm also doing this a little bit quicker, slowly. You can most probably get an EA to do all of this for you. So that was a buy, so we'll do a sell stop. Okay, right, so we got that in. This one, that seems to be the turning point. There is no clear other turning point from the top. We don't particularly want to trade against the trend. You know, when it's trending like this, that's what you want. You want to trade with the trend, so, and that's the trend. So that one is fine. That's the euro pound. I think we're almost at a point where we can start relaxing and talking, just talking about what's going on here. Boom, 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 boom. All right, our turning points have been taken out, so we might not trade today. Bit slower at getting into these guys. Aussie franc, pound franc. No, not sure if I want to overexpose myself to the franc at the moment. All right, let's go into the Aussie franc. These are from the previous. Oh, it's too fast. I'll get it right. Okay, there we are. So this one is really consolidating quite a lot. So we need 43 on this little trend line of mine, and let's do that. Oh, okay. So it is. There we are. Right. So now this one's got some nice bouncing points. So very easy to trade this one. There we go, and there we go. Okay. So much easier to trade this one. So we need, oops. We need a buy limit there. And I'm just going to make sure that we don't get into trouble, and we'll put oh, come on, a sell stop there. Okay, right. So that covers that one. Now we'll do the other side of things, which is that side. So we need to be a sell stop. We want to sell back into the body of the snake, and we want to sell limit there. Okay, and then we want to stop just above that. Okay, there we are. So this one's all sorted out. Okay. Boom, boom, boom. All right, I'm going to stay away from these for a while, and I think that's enough. That's enough for us to at the moment. I'm just going to revise what we've already done. The Euro seems to be continuing its upward trend, and I'm just trying to find a hooking spot for a turning point. That's about the closest we can get. That's most probably the closest you can get. Okay, so we're going to go there, and it's 62. Oh, come on. It activated the wrong thing. what I want to do is just make sure it's 62. Yeah, it is 62. So we can put a buy order. Although this is into the trend, it's not a vicious trend like that one. It's actually a slow trend. So we can put a buy order in there, a sell limit rather. So how the good vibrations works is we actually sell against the trend. If the price goes down there, it's trending down there, we want to sell against it. If it goes up there, we want to sell against the trend. So that's the philosophy. And why do we want to do that? Because this is a fat snake, and the price tends to come back into the snake's body, not so much, doesn't want to break out too much. All right, so we good. All right, we still got some time with the announcements, so we're fine. That was a sell limit, so this would be a buy stop. Okay. All right. There are turning points now need to change. But I'll just keep that in to remind me. I'm not going to make a change every 5 minutes. I'll do it when required. Okay, let's have a look. That's in place. That's still applicable. Do we need an upper? Yes, there's now a clear turning point. So at first it's just identifying the turning points, and then you'll see when we finished putting in all our orders, we'll just have a cup of tea and relax. There's a lot of hard work on the system in the beginning, but later on it becomes extremely relaxing. So I'm just gonna, so that's where we need to put our sell order in. We're going to put our stop in there. So none of our deals have activated so far. So yeah, that's what happens. Some days the market just consolidates sideways and nothing happens. So hopefully it's not going to be one of those days. Let's see if there's a turning point that's that we can use here yet. That one's almost, but it's not. That one's a little bit better. I'm going to take that one as a turning point. Move that up there, and then we put a sell order in. Okay, we're almost through with our orders. Sell limit. So in other words, we're selling when it gets to that level, and then we're just going to put a safety measure in there. Trading, that must be a buy stop. Okay, right, and these are all pending orders, so nothing happens until something happens. Those will leave for a while, and that one is in place. All right, so the market's going pretty sideways. There are some announcements coming up, and we might trade through those announcements. We'll just have to see how things go. This one looks like it could get a upside transaction, so we'll do that. So this one will run from that hook to there, and we'll put a sell order in there. Okay, and then we put the stop at above that. Okay, there we go. I think that's about it. We've covered most of the currencies. Those have all got by. These will leave for a while. Right. Okay, that's the hard work part of the trading. You can virtually switch the charts off and relax now. As you can see, the tools used by the system is identifying turning points and then putting a pending order one vibration rate away from the turning point, or I shouldn't say one vibration, the strategy vibration rate away from your turning point, and that's all you need to do. That's the hard. Ooh, this looks like a good one. What is 42? 62. No, that's getting close to a deal. This. Let's do it. Let's put that sell stop, sell limit in there. And we'll put a stop in there. Alright, let's see if there's anything else needing attention. Got the same thing happening there and the same thing happening there. Yeah, that's the same thing. Alright, I'm not going to trade that one. Right, I'll show you where these numbers come from and all that type of thing as time permits. 1, 2. All right, and let's just put our deals up. There's only one deal that's close to being activated. So far we've got no deals that are active. I'm basically trading one micro lot per deal, so we can follow the flip situation pretty soon if one activates. And there are times when there are no activations in spite of all of these orders, and there are other times when there are too many activations. But let's have a look. All right, just a question come in. When you click on the sell limit order, I noticed that you did not put in the number as it is it automatic? Yes. MetaTrader, wherever you put your cursor, let's say I put my cursor there and you right click, it then says trading. It will automatically remember that level that your cursor was at, and those are the prices that it will automatically put into your pending orders. So that's just a little quirk of MetaTrader. It's quite handy. I think a lot of programs do that. So that's how that works. It actually puts in the value that where your cursor is. It saves a lot of time. I don't have to enter anything, and that's why instead of putting a stop in, I'd rather just put in an order to trade the other way. It does cost a spread, but when this deal activates, I will cancel that one and put a proper stop in. Then I don't pay an extra spread. Yeah. how far back in time do you determine the turning points? What we're after is a recent trend where that will make the price exhausted. So you don't want to go back there and find a turning point if the market's already trended all over. So you want the most recent one is most probably the best one. Like this one is a pretty good one because there's the trend. That's exactly what we're looking for, is a trend that's going to get somewhere and then get exhausted and just fall over. So you want to use turning points that are going to fulfill that requirement rather than say, oh, here's a turning point. But so much has happened since then. The momentum and all that has dissipated. So you want one that has got recent momentum driving it. Thanks for that question. Are you always using? Yes. So we use one-on-one risk return ratios. Yeah. Got a comment here. Careful, that was 43 minutes, not pips. Not quite sure what that meant. Yeah, just if you take these trend lines and you activate them like that, and you put your cursor or you just move the trend line to fraction, it'll give you two readings. The 10 that you see means it's 10 candles or 10 periods that the beginning of this trend line is to the end. So that's what that 10 means. And then the 621 that you see on the right of that is the number of points that the price has moved from the beginning of this trend line to there. So that's what I'm using. I'm using the number of points. So if I'm looking for 62 pips, I look for 620 points, because points are basically pips times 10. So that's how this trend line works. The angle has got absolutely nothing to do with the with how many pips. If I now take that, all right, let's just watch it. You see that 62? 62 stays the same. The angle doesn't affect the number of pips because it's on the same level. But so the angle has got nothing to do with it. It's a level. The angle measures the number of candles that you have, from the beginning of the trend line to the end. That's what the angle moves. So you'll see, look at the number 10, 30, so it's measuring the number of candles, but the number, the 56 that you see, because I'm sort of going horizontal, doesn't change. Okay, I hope that clarifies that for you. Is the Aussie a good one too? Where's the Aussie? They're all good. You can see I haven't differentiated between any currencies. I've just put the deals in as I see them. The only thing to avoid is strongly trending currencies, very strongly. You can see none of the currencies are trending strongly. You need to avoid strongly trending currencies. That's the only differential. But when it's coming out of the Tokyo tunnel, sometimes that's exactly what it does. It just goes sideways like that. Do you have an EA that sets these pending orders on either side? No, as you can see, I haven't used an EA. I did it all manually. But certainly you can go and write one. The problem with writing it is finding the turning points, but there are ways of finding those turning points, not too tricky. If you use a zigzag indicator or something like that. Thanks. All right. Okay, now we're coming to a potential activation here. Let's have a look. I'll keep it open on all of them so we can watch them all. None of them seem to be, it seems to be very sideways. Look, there's an announcement in 10 minutes time. So that's most probably what's going on. The market's nervous. And I'm not going to ignore announcements today. I'm going to live dangerously. I have to make at least 50 pips today, and I'm not going to make that by being conservative. So here's the deal that's the closest to activation, so we'll watch it. Others seem to be quite, oh, there's the francs going down. So do you offer service where you live trade every day? No, we're going to be trading live most probably once a week at least. The last time I traded it was more on a freestyle basis. I used support resistance, all kinds of other things. So it depends. This seemed to be a good opportunity to do the good vibrations. Haven't done the good vibrations for a while, so I'm trading the good vibrations exclusively today, ignoring support resistance, all those kind of stuff. Thanks for that question. How do you determine if you need a 150 or different vibration rate? All right, I'll get into that pretty soon. Thanks for that question. All right, wondering, do you adjust the stops and targets for open orders when entering a new hour? The answer is it depends. One of the things that I like doing is you'll see the numbers aren't too different. There's quite a big difference. If I'm using a number that's fairly high, I won't adjust. I'll only adjust if it goes from like 46 to 70. Now that's a huge adjustment. Then I would adjust my stops and targets and things like that. But if it's just small 10 pip adjustments, I won't. Like that drop from 71 to 51 that I'm showing on the pound might warrant an adjustment. All right, the market seems pretty flat at the moment, but again, as I say, there's some big announcements coming up. Let's have a look. It's coming up in, that's my local time. I haven't updated this. I'll just update it. So that's the next announcement. The pound, that's the one, and we'll and it's a red announcement. High impact can be expected. We might cancel our pound deals, although obviously the pound can affect all the other currencies. So seeing that we're coming up to an announcement on the pound, that's exactly what we'll do. Is we'll just go and cancel all the pound deals. I just want to see this one that I'm in here. It's the euro yen. All right, so the pound will pull the Aussie and the euro with it if it's a major move, but the pound has been known to move on its own. So let's go and do that. Let's go to the orders, sort them, and then delete them. All that hard work, but we'll go and put them in again when we finished. All right. Come on. Don't be shy. Taking a while. I don't think I can delete anything until this one's sorted out. That's quick. Must have heard me. Okay, oops, no more pound transactions anymore. Just going to leave that out. Right, just going through some of the comments that have come in. Thank you very much for your feedback and comments and questions. Uh, yeah. All right, I'll come back to how we determine the vibration rates in a minute. I'm just going to take a quick break, and I'll be back in most probably 2 minutes. Yeah, we've got 2 minutes before the announcement. Where this system becomes quite a relaxing system, because now it's a bit like fishing. We've put our hooks into the water, we've baited them, and we now just have to wait for the market to come and take one of them. Okay, so if you do have any questions, I will be addressing, there are 3 questions here, or 2 questions actually, how to determine the 150 rate, and I think that's about the only one that's outstanding. I will go through the whole system in the next 10 minutes or so. So I'll be back in 2 minutes. All right, okay, here we go. So here's the basis of the good vibrations trading system. Is that what has happened is that we've analyzed the movements in the market in the particular hours, and these are the movements that occur, in other words the vibration rates that occur in each currency in each hour over, let's say, the last 2 months, or it's actually a 3-month period. Take about 13 weeks. So on average, the pound yen at 0-hour GMT would move that much, and the next one, and you can actually see the opening of the various markets. That's in fact the opening of the markets, and then you can see the opening of the US market, and you can see the opening of the UK market and the US market by the jump in volumes. Look at that, from 28 to 43, from 32s. So that's how we've actually determined the vibration rates. It's really the movement of the currency in a particular hour. Okay. Sounds like some people aren't hearing me and some aren't, so I'm getting like mixed messages. But we'll just flip back to the charts quickly because the announcement's about to take place, and let's just see if there's any major impact on the pound announcement. It's a pound announcement that's going to be taking place in the next minute or two. No, I was muted, but when I take a break, I mute myself. Okay, it looks like it's out, and apparently it's worse than expected. So let's see. I'm not quite sure why the charts are essentially not doing anything. I guess we're in for a bit of a shock here. Let's just see. Nothing. I better open another set of charts. I don't know if these are frozen or what. They don't seem to be reflecting any movement. Okay, there isn't much movement. Just looking at things overall, nothing much happening. Let's see, have any of our deals activated? No, not a single one yet. So that's quite interesting. We've cruised through that announcement. I'm looking at the 1-minute charts on just another system, and there's the biggest movement. The pound is starting to go south. It was very close to a buy, so it's actually moving away from our order, and therefore yeah, nothing much happening there. Okay, there's the move south. Let's see if it pulls the euro with it, and the Oz not so much, but nothing that's affecting our deals yet. And this is what might happen, is that we might just go through the whole 3 hours with no deals whatsoever. Sometimes the market is pretty quiet, and that also suggests that I might have been too conservative with my vibration rate, but let's see how it turns out. Okay, now let's have a look at the, oops, the pound is moving now, so let's just leave it alone. It's still a little bit early. I'm actually cancel them. All right, because we've got a new turning point up there, and we still have a turning point over here. And now we've gone into the 71 mode, which is way too much, but anyway, let's do it. Oh, there it's not that much. 71. Okay, that's good enough. So if the price goes 71 from there, we want to go in, so we're going to put a buy order. And do the same exercise again. I'll stop. As I said, I'll change all of that when if the deal activates. Why I don't do that right away is time is of the essence. When you're putting in orders, you don't want to spend hours and hours putting in orders. And you can see most of the orders that we put in are don't activate. Oops, not that way. Sell limit. Come on, don't be shy. Took so long, I forgot what I was doing. Better just put a buy stop in there to stop this thing from running away. Okay, there we go. So we back in the pound. We've waited for the announcement results. It might start trending now. Let's just see, but it doesn't seem to be in a hurry. Okay, it's down there. Not a single deal has activated yet, which could mean that the market got such a shock yesterday that it's sort of just consolidating and thinking about what's going on out there. Right, let's get back to our tables. Okay, all right. So what this basically does is it extracts the values for you based on your own time zone. So I'm in Australia. My time zone is 10 plus 10. I'm plus 10 on GMT. That offset you can get as shown in the book, the Good Vibrations book. You can get that from Time and Date sites like that. So you put your 10 in, and you put the current time, which now needs to be updated to 7 o'clock to 5 o'clock in the afternoon locally, and it then will take these tables and convert them to the correct lookup values that you need to use. Now, here are the three strategies that we were talking about. The 100 is taking the vibration rate as given. The 150 is a more conservative one, and then the 200 is hyper conservative. So you will only get the exceptional vibrations that shoot up and out of the consolidation using that one. 150 is conservative, and judging by the fact that none of our deals have activated, maybe I should have gone for 100 adjustment today, but essentially I think in a live trading environment you want to be a little bit more conservative. But if you change, it allows you to change this. So if you want to go for 100, it gives you the rates at 100, and if you want to go for 150, it'll give you the rates at 150. The big thing here is that you never want the spread to be more than 15% of the vibration rate. So here you can see for the pound yen, this is actually ideal. We've got no problems with the spread. But if this was I don't know, let's say later in the day, no, still fine. Early in the morning, you can see this is now getting closer to 15%, which means that sometimes it's better to trade another currency other than this particular one. What is the time? It's 1700. Okay. Right, so that's where those numbers come from. That so I basically did the lookup. I said, all right, what will the rates be at the various times? And what I then did is I put the values onto the charts in this format, so that I don't ever have to look them up again, because now tomorrow I just drag those values across to tomorrow, and then I don't have to look them up again. So that's where those values come from. These values are based on 150. I normally trade 150 as a vibration rate. It's quite a nice level to start on. Okay, so those are the vibration rates and where they come from. Let's see if there's any questions out there. So does that answer your question? So if the market was, which I thought it would be, a little bit jumpy after yesterday, but in fact it's more in a consolidation mode now, and if it's consolidating, you use the 100. If it's let's say normal, then you use 150, and then if it's spiky and jumpy, use 200, or you don't trade at all. So that's how you use these strategies. Those are actually the most important decisions you need to make on the day, because if you get these wrong, like I might have got this wrong today, I should have used 110 or 100 or 120 or something like that. You can change these values. That might have been a little bit better. Oops, where did that go? Okay, so so as we can see, the market's really just consolidate. If I had used 100, for instance, in this particular case, we might have just got spiked in there, and it would have taken us, because 150, 100 would be, what would that be, divided by 3, 40. So this little spike would have been 40, and we certainly would have got spiked in there and taken in. So yeah, so these vibration rates that you see here are actually for the previous hour. When I start at 7 London time, then that is the rate for 6 to 7. I then put 7 to 8, 8 to 9, and 9 to 10, and that's when the webinar will stop. So I get an idea of where I'm coming from and where I'm going. Those rates. Okay. If you entered a trade and there's a new swing high, and so yes, you always adjust for new ones, not one that gets made between the previous and swing high and swing low, but a new one. So like at the moment, you can see this price might start making a new low soon, and then you can adjust. But I don't adjust it that often, but certainly you should adjust for new highs and new lows. Thanks for the question. Okay. Seems like the same people are having this sound problem, so it's obviously a very limited area, limited problem. Okay, when we look at turning points, what we're trying to do is we're trying to find we're actually trying to find the start of a trend. So if this price had kept on and kept on, it would have been a trend, and that would have been the start of the trend. So the turning point is also at the same time the start of a trend. Now, that turning point there was the start of a trend, but then it got wiped out, because now that becomes the potential start of the trend, and and at the moment it's getting wiped out as a trend, because it is no longer the potential start of a trend. That's what you're trying to achieve with the turning points, is we're trying to catch or identify the start of the. Now, we don't know, so any turning point, and in the book they call it a potential turning point, because we don't know whether it's a turning point until we see the trend that follows. Now, for instance, this turning point here is almost being invalidated, but we'll stick with it. There is no other alternative, but certainly this one has now got a new alternative, and we can actually now replace the sell order here with that new turning point. And that's my next tour of duty, is I have to update the turning points and the amounts. Okay, let's have a look. There's nothing happening out there. Look at this. Not even a single one is green. Okay, there's a greenie. It's a sell on the yen. But other than that, the market is trading sideways, and it's quite honest, you can't make money in a sideways market that easily. This technique is most probably the best one if you choose the 100 adjustment. So let's have a look. Not a single currency is there's the yen. The yen is looking like it might do things. Now here's an example. There's the turning point. There's the trend. So that's what we want. So let's wait and see if that point gets reached. And very often the transaction just goes positive straight away. It literally spikes in and spikes out. It's a bit like that, spikes and comes out of that. So that's about the closest we are. It's only about 4 pips, and it will take us in. So I must apologize for the sideways market. I really didn't think it would be that sideways, given given the disruption that's happened in the market. So if you're lazy, you just leave the transactions as they are, and that's a bit what I do. And or if you're really diligent, you adjust them for new highs and new lows all the time, and also for crossing over into the new hour, as it were. And I'll be doing that soon. It's going. So now we in our oh, it's already, gee, my goodness, 80. 53. There we are. So we need a buy order there. This is the euro. So we must get rid of the buy limit that there was. And we must get rid of that sell stop down at the bottom there. Now the sell stop. So delete that, and then we update this one. Buy limit. And you can always just judge whether it's with the ability to see the deals. You can just judge whether it's come in correctly or not. This would be a sell stop. Okay, there we are. Oh, we still don't have any active deals. So I've updated this one for the new turning point and the new vibration rate. This is fine. Oh, look at that. Just missed. I don't know if it's going to go again, but just missed that. That's why I say they go positive very quickly, because they sort of just touch and reverse sometimes, not always. All right, let's look at some more questions. If we are using the good vibration currency movement and for a particular, why do we use more than an hour to determine the previous turning point? Very good question, and quite honestly, because it works. I can't answer any more than that. If you can find a better way, and then please go ahead and use it. Sometimes they don't. The methods don't make 100% logical sense, and but it is a method, and it's an understandable method, and yeah, and it works. But certainly, if you want to refine the method and get it absolutely perfect, then certainly you can apply that. Do it and see if you get better results. That's the thing to do, really, is take any trading system and say, oh well, I don't like this, I'm going to try that, and you go and try it and see if it improves. But there's no particular reason. It's a bit like, we use volume to scalp, and a lot of people say, oh, but the volume isn't accurate because it's different from one broker to the next and all that, but it works, and so you're using most probably information that's most probably 70% accurate or 80% accurate, but that's if it's giving you winning deals, then use it. So a lot of people want to be absolutely perfect and miss a lot of opportunities that way, I guess. So these the turning points, as you say, could be done on an hourly basis, but what we're looking at is trends, and we're not worrying whether the trend is has taken 1 hour. You see, like that trend, that's clearly, oops, I don't know how these things happen. That's clearly a trend, but it's gone over 1, 2, 3 hours, and it might even have gone over 4 hours. So if you're looking for hour trends, then it's a different system altogether. We're looking for a complete trend. All right, so the euro has it's just missed the hook there by a couple of pips, and now it's probably going to go down. That's all right. I think today's just not going to happen. Very, very sideways. I'll see there's some lines up there. Aussie yen. Very sideways market, so nothing much is happening. Oh, I just want to check the size here. Yeah, 43, 39, 37. There's not much happening in the market at the moment. Interesting. Okay. Oh, that's a good observation. The euro yen has actually, most probably we would have caught that if we had used the new vibration rate for this transaction, which we could have. And in fact, now's a good time to actually, you treat that as a turning point and put in the 49 as our next buy limit. Okay, and then so I'm using the next trading. That would be a sell stop. Okay. And as you can see, that would have hit just perfectly, absolutely perfectly. Okay, let's have a look. Then there doesn't seem to be anything happening. The yen. The yen is still within the potential buy zone. All right, there's nothing much happening today, I'm afraid. Think of the yen. Okay. All right, let's have a look. Any other questions about the good vibrations system? It's essentially we're trading the end of a trend from the previous turning point, and that approximates a exhaustion level, and we want to get in at that exhaustion level. It's a statistical technique because it's saying on average the certain currency will get exhausted at a certain point. And how we discovered this is when we were scalping, we found the euro was virtually at the drop of a hat. Every time it reached 32 pips, it reversed. It was, after a while, it was becoming quite a joke. So when it was within 30 or 34 pips, it would reverse. And that's how we discovered it, and we actually then went into all the currencies and found that they actually do act that way in certain market conditions. We're not talking about announcement market or highly trending markets. We're talking about almost normal market announcements, that these currencies react in that way all the time based on their hourly vibration rates, and that's how it was found. There's no rocket science. It was found from observation. What is the best time to trade this system? The fact that the vibration rates adjust to any time you want is most probably saying that you can trade it at any time. If you understand that sort of logic is because this is a system where you're not trading, the vibration rate you're using is adjusting itself to the time zone that you're trading in. Therefore, you can trade it all the time. But what you'll find is that this is where you get knocked out. There's a lot of currencies. Let's take the Canadian dollar in the, I don't know. You see, the Canadian dollar, for instance, even now is over the top. It's 16% because Canadian dollar is volatile in the US market, not so much in the outside markets. So most of its volatility comes in 2 or 3 hours of the market. But so there will be currencies that disqualify themselves automatically by this little calculation here. So you can actually trade it at any time as long as you adhere to this 15% rule. Why do you not enter a 100% rate now on the currencies? We'll wait to see if that decision was a bad one or not. There's still a few announcements and a few other things happening out there. I'd rather have a day of no trades than being too aggressive. Nothing wrong with having a day of no trading. There's still quite a bit coming up here. There's the euro in half an hour's time, major announcement, and then the pound half an hour later, and the pound again. So there's quite a bit still coming, and that might be why the market's consolidating. They're waiting for that news to come out. That's also often the case. So let's just yeah. So that's the philosophy of this trading system. Is to catch the spikes that spike up and come down back into the body of the snake. And that happens more often than not. You know, that kind of spike that went up there and then it spikes back, and that's the idea. And that's why you will have days when there's nothing, but you'll have days you know, that just make up for that nothing. You'll have days where the euro goes up, down, and you actually have 3 trades in the euro. You made 100 pips just on the euro because you've gone 60 or 62, 62, 62, or if you've gone for the 100, you've gone 40, 40, 40, 40, and that just is amazing. So it's a bit like fishing again. You put your hook in the water. If nothing happens, you go home. But there are days when you catch those real big ones, and you catch them twice. Yeah, you catch them twice, so it's quite nice. Is there software to work out the vibration rates? We found a bit of information out there that give the vibration rates, but we haven't found them reliable enough. So what we do, we actually have a little Excel program where we feed the MetaTrader data into, and it calculates it. We rather calculate it ourselves, and then we back check it, then use the other people's calculations, because we've actually found them to be inconsistent. All right, say a trade gets activated, do you keep the stops or do you enter stop position on the position? No. When the deal gets activated, I cancel that false stop that's there and put in a real one, and I put a real target in. Otherwise, I would pay twice the spread. So, no, not twice the spread. I'd just pay one spread unnecessarily. You said you use a stop loss of 50% of the variation rate. No, no, I never said that. In fact, I think we circulated, I'll circulate it again. Um, it's a following stop. I was going to use a following stop of 50%, and that again I put in when the deal activates. So what you would do is you'd put a following stop of 50. So if the target is 50 pips, you put a following stop of 25. So that it was a following stop that we said that we. I have sent out this chart setup and trading methodology. I think it does following stop of 50%. Yeah, it is on there. I hope you've all received it. And the take profit is the vibration rate. Sorry, I've been talking to myself for a while, so apologies for that. But essentially, it looks like we just got a really sideways day. I'm just going to hang on till this next announcement and see what, if anything happens, and then we'll have to take it from there. But can you believe it? We've put in a good, how many orders? Must probably 18 orders or so, and not a single one has activated. When a deal activates, remember this stop is just a rush stop. It's just to make sure that if it suddenly goes 200 pips, you don't get. So this is emergency stop. So when the deal activates, there's a lot of things that happen. I will then put in an official target. I'll put in an official stop. I'll delete that stop, and I'll put in a following stop in. But all those activities are unnecessary if the deal isn't going to activate. So I don't do it until the deal is activated. If you do that right in the beginning, I used to do that in the beginning, and it took me an hour to put my orders in, and then I lose out on orders and things. I've learned that you just rush to the market, put all your orders in, and then you go back and take it from there. I did not hear your response. So you leave the original stop until the following stop is activated. That actually happens automatically. When you have a stop in place, it will stay there. And then let's say you've got a 50 pip following stop, and the price goes plus 51, it will automatically drag your original stop to plus 1. So it's an automatic thing. You don't cancel the one and then run with the following stop. They're the same thing. How do you clear all those unfilled orders? Yeah, that's quite a good question. Unfortunately, at the moment, I only know the one-by-one method, but it would be nice to do them all. You could most probably try a control. Let's have a look. While we're waiting and nothing's happening, let's see if we can do batch deletes. No, control doesn't do it. Shift doesn't do it. No. What kind of stop loss would you put in? It's always the same. It's the vibration rate. That's the size of the stop loss, and it will be an ordinary stop loss. All right, so yeah, you have to actually go and clear them one by one. That's the only heartache, I guess. Let's have a look. At the moment, we of all of these transactions, we haven't got a single one that's within 10 pips of our. It could be said that I've misjudged the market and I should have gone in with 100. I'd rather do that, as I said earlier. I'd rather do that than overjudge the market and end up with a lot of stop outs. There are several scripts available. Okay, yeah, if you could let me send them through to Mary MacArthur, that would be great. If you could send some scripts through to delete all the redundant orders. Okay, it's on its way, the euro yen. Comment here, I think the delete pending is in the default empty form. Not sure what that means, but it'd be interesting to find out. Yeah, this method is purely mechanical. You don't need any analysis. You don't need any indicators. It's just absolutely mechanical, and therefore it's fairly easy to learn and trade. And it also gives you a feel of why the best traders are in fact retracement traders. They trade those outside little edges there. And if you get really good at it, it makes quite a big difference if you can trade those edges, because that in fact is what how the market gets managed by the big guys. You know, if they like a particular certain price level, they will actually push in orders, and that's the way we scalp too. When we use volumes, we actually, the orders actually push the price back into the consolidation, and it goes there, and the orders push it back into consolidation. That's how the market moves. And then they see a trend like that and they leave it if they like it, and then this what moves that was probably a whole lot of buy orders that came in. So you go by the volume. So this method uses more or less that kind of philosophy. Yeah, the good vibrations is a type of grid system, because what you have is there's the start of the grid, there's your first level, and there's the second level. And what we're saying is that most of the transactions happen in this area, which is right. Yeah, it's a very good observation there. It's just that this is very specific to let's say a 3 hour, and the variation is obviously there in the numbers. You know, if you look at the variation there from 62 to 49, then certainly that's where the difference between the grid system and the grid system normally operates on a fixed grid. In other words, whatever the grid size is, that's what you would use. But the difference here is that we vary the grid size virtually every hour. But good observation, because these are grids. It's simple, as simple as that. Come on, market, what are you doing? We're falling asleep here. I must apologize for this market. Not going to give me a chance to make my 50 pips. The values are updated every 2 months. You can see I'm using the August and September values at the moment. So at the end of September, we then send a new model out to all the clients, and they then have this on a every 2 months. And we normally go about, I think, 13 or 14 weeks back when we do our analysis, so it's fairly current stuff. All right, might as well chat while we're doing that, while there's nothing happening. Goodness, this is really not good. So the yen stays. The only reason why the yen is the most is that it's already so low in volatility. It's only at 20 pips, you know, so it must by definition almost be close to the buy and the sell all the time. So that's why the yen is coming up as green, but you can see the market is stone dead. Another 15 minutes before the next announcement. Can I put the vibration rate? Yes, look, the good guys trade with a vibration rate per currency. So they would set the pound for 132, and they'd set the franc for 115, and so you can actually put the vibration rate whatever you want. And all you do is you overwrite this. You go say 132 is a popular one, and then when it comes to the drop-down menu, that's what will come up. So this is where you do your those kind of changes, and then when you get here, you can choose them accordingly. So you can these are, you can overwrite these. These are variables. Thanks for that question. Very important. That's actually a very important question, because the guys that trade this every day have that. They have per currency, they have an adjustment rate, and per market type or market, they have an adjustment rate here. So the true trick of this whole system is actually getting this right. Like today, if I had gone for 100, maybe we would have had some action, and we would have had positive deals, because you can see it's just snaking now. It's just going up and down and up and down. So we would, at 100, we certainly would have had positive deals. What is your take profit level? One vibration rate. So it's one of those little sticks. So when the deal activates, I'll put a stop one vibration rate away from the deal, and that's another reason why I don't put those in, is that at the time of activation these rates might change. Now the yen is as flat as a pancake, so you don't, but some of the other currencies you can see, let's take the Oz, that one doesn't jump around, the pound I think jumps around. It jumps from 71 to 51. Now if you enter a stop and a target at 71 and you then move into the new time zone, you have to enter those deals. That's why I don't enter them. I just wait for it to activate. Then I say, oh, it's activated. What time zone am I in? Oh, I'll use 51. So then I put my target in. It's 51, 51. And so that's also a reason why I don't put the targets and the stop in straight away. I put a disaster stop or a provisional stop in, and then that helps a bit. Right, now this one might, no. See, the 100 would have worked there. Boom. Right, there's some movement on the pound, but it's just going back into the snake. The snake is basically the outside of this movement. So what I always say, it's going back into the movement. There's the movement. It's just going. The price goes back into the movement, back into the movement all the time. Even in a trend like that, it goes back in, back in. There's a snake activity that happens. Right, let's have a look. Oh, lots of comments coming in. All right, very good comment that's come in here. It says, looking at the Aussie yen, it looks like there's a slight uptrend. Would it make sense to go with 100% retracement for buy limits orders, and for 150% retracement for sell orders? I think that's what it's meant to say. So that is very good, because the retracements in a trend are small and the extensions are big. So certainly that would make a lot of sense to use 100 for the retracements, 150 or even 200 for the extensions. Now you'll also find that comes pretty close to the Fibonacci concept, pretty close. You'll get the same kind of thing happening. But that's a very good observation for somebody who's just bought the book today. Well done there. Yeah, that's very astute of you to see that. The other thing that we do sometimes is, let's say that's the selling point there. Then the price comes to the same, but obviously goes past and goes over there somewhere, and then turns around and comes back. So sometimes we take the target from that turning point, and so we reduce the target because it's obviously gone over and come back. So that's just something, a little refinement that sometimes is applied, where we don't go for the full retracement, we go for the retracement from the turning point, not from the entry point. But that's a refinement. Okay. I usually trade the US session, and I like trading the Euro CAD. Why isn't there one of the pairs offered? I'm not quite sure what the spread is on the Euro CAD. It might be quite high, but if you want to get an idea of what to do, you can go to the site Mataf, very fantastic site, and that's where a lot of the information comes from. There, please notice matter of, click on there. Do you trust this? Okay, shall we trust it? Shall we? Yes, 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 let's trust it. Okay, and then we, I'll show you where to find it. Good question. You'll find that some of the currencies disqualify themselves on the spread so often that this site is doesn't work very well on this computer, especially when the resources are stretched. Like at the moment, they're a bit stretched when I do a webinar. But it's a extremely resource full site. Currency, I think it's under currency volatility. I might be wrong, but let's have a look. This, yeah, I can go and have a look at this site. It's got all the maps and the relative strength indicators and all those kind of things. Yeah, this is what I was looking for. But it's not just, oh, there you are. Perfect. So if you want a guide, now we've used this before, but and I haven't found it as accurate as we'd like it to be. But certainly you can use this as a guide. So let's go and have a look at the Euro Franc. There we are, Euro Franc. No, which one is the one you like trading? Euro CAD. Well, this one it doesn't even have it. It's very unusual cross that. Let's have a look. The euros. Euro. Where is it? Oh, still can't find it. It's a very unusual cross that. Yeah, there you are, Euro CAD. Click on that, and there it loads the all the Euro CAD information on. Now it's slightly different to what we've just seen, so I don't know how to interpret this information. But there's an idea, and as I said earlier, you can see that the CAD's volume, most of the CAD's volume happens in 2 to 3 or 3 to 4 hours of the day. The rest is all very low and unsubstantial. So there you can see the vibration rate for the CAD, Euro CAD, is very high when you are trading it in the US session, but very low in the other sessions. So that's where you can get the information from. And also they've got nice Monday, Tuesday, Wednesday, Thursday, Friday information, which also tells you when to stay away. When it's very volatile on a Friday, stay away. When it's reasonable, that's a nice day to trade the Euro CAD, because you can see it's sort of adequate, but not like that. Anyway, but there's a lot of information on the site, so please, go and visit it if you. But the link is from the book, so you can go. That's where we originally got the vibration rates from, but we've refined them a little bit. We found them a little bit off sometimes. So if you don't have a currency on our one, there might be a reason for it. It might be that the spread is pretty high. We don't have it on the spreads, so you might get disqualified there too often. That's why we may have left it off. But that's what you do. You create your own vibration rates. Whoa, it really looks like we're going to have a tremendously poor day here. Let's have another look. Nothing, absolutely nothing happening. And clearly I should have used the 100 today. You take an example, this as an example. If I'd used 100, I would have been activated there. Good chance that I would have been activated there, and I would have activated there, but I would have made that and that. So it just shows you the importance of judging the day. And certainly I didn't expect a dead day like this, but you can actually see how it works on a 100. 100 would have been 40. quite a big difference. So you can see how it would have caught the top there, caught the bottom there, and caught the top again. So and that's what you want: 40 up, 40 down, 40 that way. You've made 120 pips on one currency if you judge it properly. Did you say that it advanced? All right, so, sorry, sometimes people don't catch. One of the participants in the webinar has said that when the currency is trending, should one use lower vibration rates for the with the trend or the against the trend retracements, and higher vibration rates for the with the trend extensions? And that was the discussion. There's no rule or law or anything. That was based. All right, here's the announcement is happening, I think, or about to happen. So let's just see what happens. But so what that person has done is given this system a bit of thought and said, okay, well, if the system's trending, I'm going to we don't have a good trend here as an example. I'm going to use 100% for my against the trend retracements, and I'm going to use 150 or 200 for my with the trend retracements. And that's a good philosophy, but you'd have to obviously refine it. It's not part of the system. It was a discussion point. What time frame do you use? I did send that out earlier. Shall I send it out again? I did send the chart setup and all those guys. Can everybody in the room just confirm that they've received the summary of, no, I don't want everybody in the room, but if you haven't received it, can you just let me know and I'll just resend it, because I have mentioned all those things on that summary. All right, so all right, I think the announcements should happen any moment now. What has happened? All right, I'll resend that. If you've arrived late or something like that, you might not have received it. I sent it through the GoToMeeting talk facility, so it's not an email thing or anything. It's just, I sent it through that way. I'll have to quickly find it again and see if I can get that sent. All right, I sent it earlier along, so a lot of people that arrived maybe 5 minutes late will not have received it. Okay, I'm sending it right now. You should receive it. All right, there's a little bit of life coming into the market here. Let's see if something happens. Nothing. Not a single activation. So the euro yen looks like the best at this stage. euro yen still looks like the most possible deal, but nothing happening really. CAD's coming close. It looks like I've misjudged by using 150 today. I've certainly misjudged the market, and again, as I say, rather do that than do the opposite. There are a lot of announcements in this market, and that's why I've gone a bit more conservative than I should have, most probably. But let's leave it at that. But you can see the examples of some of the deals that that stand out. I mean, even the franc here on a 100% would have gone in there, and in there. And it's not unlikely. It's not unusual for people to make three times on one currency in one trading session. Make a good pips on one currency. So there's a lot of people that haven't received it. Oh, hang on, this might have happened after I sent it or before I sent it. Can you please let me know if you still haven't received it? The Oz. Why haven't I got it in? Oz. Should have adjusted my my turning point there to that level, but it still hasn't hit. But it most probably will have hit at 39. So we'll just leave it as it is, but it shows you I haven't been adjusting. I went through a period of distraction, but that was certainly a new turning point that we should have used, and that is also a new turning point that we should have used. So I'll go through the whole all of the currencies pretty soon. Right, I'm sending this again, and I'm sending it through to the entire audience. So I'm not quite sure why you're not receiving it. It's in the chat facility, and I'm going to send it again. I'm also going to use the question facility, and I'm going to send it to everybody there. Oh my goodness. Look at this move. Oh. Sad. It's so sad to see. Look at this, it's just missing, and in fact I think if I had adjusted, no, 671 is too high, but if I adjusted a lot of these, they would have taken. Okay, we've got one. The euro I think is activated. Let's just see. The euro is activated, the yen has activated, and the euro yen is activated. Okay. Now this is quite dangerous. I don't want more than 6 transactions active at the same time, and we've got a lot of we've got 4 already. Oh, we've got more than 4. So I'm going to see if I can cancel as many of these transactions as I can. Let's just have a look how many we have. 1, 2, 3, 4, 5, 6, 7. Right. Yeah, the slow process starts. I think FXCM is better in this way, that you can actually cancel a lot of transactions at the same time. Come on, can't take that long to cancel. And the transactions I need to cancel all the limit orders. Oh no, let's be careful, because they're the ones we, yeah, the limit orders, the stop orders we need to keep. Okay, there we go. I'm not watching the screen enough to see what's going on, but there's a lot of action. We plus 30, we plus 40. We plus 40 on the Richter scale. So the pound looks like it's nicely positive. The vibration rate for the pound is, let's go to the pound. Sorry, I'm actually now distracted. It's the vibration rate for the pound is 71, so we need a following stop in that one of 35. 32 will do. Okay. So we've got that in place, and I can actually take this one, the buy stop on the pound. Oh, I've got to go and find it. The buy stop on the pound I need to take out. Oops. Not sure what happened there. Okay, and there's our trailing stops kicked in. Okay, good. Right. Okay, we're up 100. I'm actually gonna close everything because our goal was 60. Let's close the biggest one first. Close order. Oh. I hope I can close them in time. Come on. Close order. All right. Now, what I've done is looks a bit crazy because I didn't stick to the system to the end. But if you make 100 pips in a session, you're happy. I just want to update the results correctly, and then I must take out all the orders that we've got at the moment. What is today's date? It is the 7th, I think. All right, so there's the results for today. Almost 100 pips. These are all the orders that, and now I need to just go and close everything. Oh, this is going to be painful. And luckily I'll see which ones are close because the greens will appear. Okay, so let's just do it. I'm sorry it's going to take a while. This is one of those things. When we can get I'd love it if we can get these scripts going. I need to just close the limits at this stage, and then I'll go and do the stops. It was quick, wasn't it? Sitting around, waiting, and suddenly this is the only problem. It takes a while to clean everything up afterwards. But as you can see, I'm just if I see a green appearing, I'd delete that first. But and I'm deleting the limit orders first because those are entry orders. The others are stops. So I just need to do it quickly. Then we'll review the day's trading and move on. Right, they're all stops, so I can take it easier a bit for a while. All right, let me just get it out. I don't want to worry about the stops. The stops are so far out of danger, they unlikely to happen, but after yesterday's move of 1,000 pips on the euro CAD, you don't want to leave any entries floating around, even if they are in the right way. And these stops are actually less of a risk because they are facing away from where the price is. So if they do get activated, they're likely to go positive very quickly. So anyway, that's the way the cookie crumbles. And now, why it was a little bit tricky today was I had a lot of orders in, and I did that on purpose because I had a goal to reach, and you couldn't reach it by trading one or two currencies. But normally I don't like having more than three orders open at the same time, and I normally trade FXCM FXCM dealing station. So I would actually I would watch the MetaTrader charts and I trade the FXCM dealing station, because the FXCM dealing station, you can delete all the orders in one go, and they also have preset targets and preset stops. So they've got one-click facilities. So, but I can't do that in a webinar. It's just inappropriate. Okay, let's go back to the history. Oh gosh, where's this custom period? It is today. Is this the right account? I don't think this is the right account even. That is today. Oh, that's because it's got all my cancellations in it too. All right, so here's the history for today. There's the actual activity, the trading that occurred. As you can see, it made $97, which is close to 97 pips. I guess if anything, it's most probably 90 pips. It's probably not too far away. All right, yeah, as I say, I actually use FXCM, which is a lot faster for these. You can actually delete them all in one go. But I would like to have a look at that EA that's on that's free on the. If you can send it through to Mary MacArthur, that would be great. Okay, now what happened is I cut the trading short quite a lot, and let's go and have a look at the chart, whether it was a good idea or not. Okay. Well, yeah, it certainly doesn't look like it was a good idea, but you see, this is exactly what this system is all about. It's about catching those spikes when they reverse. Spikes, there you can see what happened. It spiked in there and reversed, spiked in there and reversed. So that's a great one. That one, you could have caught everything in that spike. But that's what it's all about. That's what the good borrower. It's about finding the turning point. Come on, baby. Where are you? There. It's about finding the turning point, putting an order against the trend, one vibration right away, and trusting that the market will react. And the market behavior over the years has changed quite considerably because of the large institutions. I'm not talking about FXM. I'm talking about big institutions, the banks and things, using automated trading. So in other words, if they see something like this, they pump in buy orders, and that's what's causing this phenomenon where if the price varies, that they push it back, and they push it back, they push it back, and this is creating this kind of a trading system. Anyway, I think we've seen quite a bit now. All right, yeah, and there's a lot of whipsaw action that happens that's ideal for this kind of system. A lot of cleaning out of orders, the brokers call it. They just, and it's the market. It's not only the brokers. It's not the brokers, obviously. It's the market that almost cleans out. There's a cleaning out of orders kind of activity that happened there. Do you worry about having positions open at the same time? Yes, that's why I try and restrict my trading activities to only 3 currencies, and ideally I'd like something like the pound, the euro pound, to be one of those open deals, because that's like a hedge currency. And so yeah, you don't want to expose yourself. Like today, this was a bit overexposed. I was about 7 deals in the same direction, very overexposed. I'd rather have 3 good deals than 7 of these little guys. But anyway, that's happened now. Do you move your stop to break even after a certain profit amount? Yes, that is the function of the following stop. After I've reached 50%, made it 50% to the target, the following stop kicks in, and that automates the whole transaction. So thanks for that question. Yes, there's no need to actually physically move your stop. If you've got a following stop, then it happens automatically. All right. Okay. How do you choose which currency to trade? You've just seen the market chooses. I don't choose. I just put all the orders in. It's like creating a net, and then normally this one happened very quickly. Normally they activate slowly, and you can control the activation of your currencies. This one happened very quickly. I had no time to control it, but normally the market chooses which currencies you should be trading. So as long as you stick to the system, put your orders in, the market will choose which currency you trade. So the ones that I've got up are almost probably or the ones I sent out are almost probably a good starting point, but you can vary them, but you've got to take the spread into account and the volatility into account. So you've got to remember those. Yeah, so when three trades activate, I normally will watch the market and cancel the ones that are coming up for activation. So I'd watch those green blocks, and I'd adjust the green blocks. I'd cancel the green blocks as they come up. Yeah, this activity happens. It's actually quite a common sweep. They sweep the market. They go up and down and sweep all the stops and the entries out and just clean the market up. Sometimes this happens. You can actually see it on the 1 minute chart. You can see this activity. It's a sweep activity. Look at, there's the 1 minute charts. 1 minute charts. It's like it happens quite often. Not all the time, but it does. It's quite common. Let's put it that way. And this system is ideal for that. And again, you know, we were saying, oh, I've misread the market. I should have gone for 100% adjustment instead of 150 that I went for. And it just shows you that the market takes a lot of patience. It does. When you buy the Good Vibrations book, you automatically get all the support webinars and live webinars free. So it's, I mean, it's really very cheap. Forever. Or not forever, for as long as I live. No, for as long as Expert4X is around, certainly. We generally give support webinars every week for one or other of our services, and we have live trading once a week. So there will be two opportunities to do live trading and that. Two opportunities to have webinars, let's put it that way. But this was not really a good vibration, it was luck. No. I'm not quite sure why you say this was luck. Well, look, you've got to understand market behavior. It's not necessarily luck. It could be luck. You're right, it could have been luck. But market behavior says that well, go and try it out. Go and try the system out for yourself. I think that's the only way. I can't sit here and convince you that this wasn't luck or was luck. You've got to go out and try the system and see how lucky you get. It's a bit like Gary Player, you know. I think the story was that he held a bunker shot. And somebody said to him, oh geez, how lucky was that? And he said, yeah, the more I practice, the luckier I get. So you know, you've got to decide where luck is, and certainly this system is a statistical system. It's basically saying the chances are good that if the look, you've got to look at reality. If the price moves by the vibration rate, now look at that, it is likely to reverse. That's all. We're trading statistics, and here's a good example of it. It's likely to reverse, and in fact that might even be a good, the next one, if you bring it down, might be a good example of that too. So it just says it's not. And some people would call it luck that this happens all the time, or most of the time. But remember, with Forex trading, you only have to be correct 51% of the time to make money. As long as you write 51%, you'll make money. So we're trying to find something that statistically repeats itself reliably. So yeah. So if you want to call it luck, call it luck. I call it researched market behavior. I think that's most probably a more accurate description. Research market behavior says 60% of the times the market will behave in this certain way. So you're going to be wrong 40%, but forget about the 40%. You only focus on the 60% that you're right, and that's how it works. So that's yeah. Thanks for that question. Because the trades could have gone strongly against your positions. Of course they could have. Any deal that you enter, the the market can go strongly against you. So you just got to enter the deals that give you the best probability of success. Okay, thanks. Does this work for the I don't know, the XAU and the XAG? Don't try it out. Don't know. I haven't tried that. This will work in any market. You can try it on the E-minis. I've traded this on the E-minis. Works beautifully on the E-minis, on a lot of indexes, because that's what the market is. It doesn't like to move excessively, and then it comes back, and you know, that's how the market moves. So you can, if you can find any market where the market behavior is more or less like this, you can do it. Can you look through each? All right, we'll do that. Yes, that's a good question. I've just got hundreds of questions. Suddenly hundreds have come in. Mario, thank you very much for that. Yeah, it's worth buying the book, and there will be support. I think the next support webinar, unfortunately, has already happened this month. So the next one will be next month, and we have them in the Asian markets. We have them in the European market and the US market, so we can cover all our client base. Obviously need to, I obviously need to test the system myself, but do you have a feel for the performance of the system that you could share? Okay, Peter, so thanks very much for that question. I'm going to talk in general that most Forex systems work. Now I know a lot of people will say, well, how can you say that? Most work if you work them. So if you take the system and you trade it for a month, you will know the market behavior of that little section that you're testing it in so well that this system you will never want to leave it ever again. But the same applies to any other system. If you really apply yourself and make your own rules. A lot of people want to buy a system and trade it by the rules, and if it doesn't work, they go away. The guys that do well in the system have settings for each currency. They have settings for each time zone. They know how to adjust their things. You know, so you've got to make the system your own, and then it will work. But all right, I'd like to add to that. There are two kinds of traders. There are breakout traders that believe that any moment now the market is going to break out and trend for 100 pips. Those are breakout traders. Then there are the bounce traders or retracement traders that say the market mainly consolidates and only trends 15% of the time. So I'm going to trade the consolidated market. I'm going to believe that the market actually bounces and doesn't break out. So psychologically those two traders are worlds apart, and that's the first thing that you as a trader have to decide is, are you a breakout trader or you're a bounce trader? Once you've done that, then you go and find the system that meets your needs. This system is obviously a bounce trading system. So we're lucky when it doesn't trend. But we know the odds, at least we know the odds are in our favor that the market will bounce 5 or 6 or 7 or 8 times before it starts trending. And after it's trended, it will bounce even more because there's a consolidation phase before a trend, there's a trend, and then there's a consolidation. So we don't mind losing when it trends, but we'll make so much money when it consolidates before and consolidates after the trend. Where do you get the vibration rates? They are supplied in the model that accompanies the book. So All right, sorry, I'm spending a bit of time on some of the questions because they all right. There's a question of when is the best time to trade this one? Look, the best time is when the market gets manipulated. And the beginning of the European market is a prime example of market manipulation when the brokers are basically clearing out the stops and things like that. So maybe what we've just traded here is a good time to trade the system. The American market, the announcements are severe. They create big trends. So you can trade the American market, but then you've got to use a 200% adjustment. And you can trade the Asian market, but then you use 100% adjustment. So that's the beauty of the system. You can actually tune it to perform. And okay, so having said that, the best time to trade the system is when when it suits your lifestyle. If you're free to trade the early European market, that's great. If you're free to trade the Asian market, that's great. So rather try and fit it into your lifestyle than try and trade at 2 o'clock in the morning or 5 o'clock in the morning or whatever. So again, that's another sort of guideline into when's the best time to trade any system is when it suits your lifestyle. All right, the vibration rates are in the book. All right, so sorry, Ian, I'll get back to your query. If you have a full-time job, can you trade for consistent? As you've seen today, the good vibration system is a 3-hour system. It's what we call a session trading. You trade the beginning of the UK or the end of the UK, or there is no end to the UK actually, or the beginning of the US, and or the beginning of the so it's a session trading. So you just need to decide you know, which session you trade, but generally I wouldn't trade this beyond 3 hours, and you trade it when the market's reasonably volatile, normally when it's opening like it is now. Okay. If you have a full-time job, you decide, you know, like you might only be able to trade the Asian market. So become an expert at the Asian market and trade. Asian market, you actually only have to trade 2 hours because it sorts itself out very quickly. It's basically the Oz and the yen and okay. Who invented the system? It was it's not invented. It was created from observation. You might have missed earlier. We were trading another system, and we noticed that the prices retracted at the same point quite consistently. Like we noticed, for instance, the euro. I could almost put money on that at 32 pips the euro would retrace at a certain time of day. It's very important, certain time of day. So slowly we developed that concept into all the currencies, into all the times of day, and it started making sense, you know, that if the volatility is a certain level, that's where the retracement levels will be. So that's how it was actually the same as the long candle principles. They were I think a lot of they were developed from market behavior. So you look at the market behavior, you say, oh, that's what the market does. Eh? Oh, it reverses the end, and then you create a system. All right, thanks for the questions. All right, sorry, there's a question here that's been waiting a long time. Let's look at the, it's a pity the lines are missing now because the transactions. All right, let's quickly look at the transactions. So we had a sell in there. It shot up, must have come very close to stopping us out, and then came right down, and we must have exited profitably because I think all our deals are profitable. Let's look at this one. Same thing. We had there. Oh, there's the line still. So we it literally must probably just took our entry and shot right down. In fact, I think we made quite a bit of money on the pound. I'll just quickly go down and get the timing right. Custom, and it was today. So we can focus now. Unfortunately, it brings up all the cancelled orders at the same time. So let's have a look. So I think the pound was, yeah, the pound was our best trade because it just nipped, it literally nipped the entry and just shot straight back. So and that's the intention of the system. The system is to nip the entry and go positive straight away. I don't know which transactions we entered. The same thing happened. You can see there's the spike, and it came back, and we must have exited on the coming back side of it. The yen. Boom, boom. Oh, all right. What's left is there. Look, there's the spike that took us in, and we exited it as it retraced. So this is spike trading. It's like, well, in this case it was, but sometimes it's slower. This one was one that we were. I think this one, in fact, might have gone negative quite a bit, and then no, I'm not quite sure what happened here. But, difficult to reconstruct it without. And you have to be quite quick, because I think this one we entered on that spike and exited there, and obviously if we stayed in it, it would have gone negative. But certainly most of these entries that we went in were on spikes. Here's the turning point. Yeah, difficult to reconstruct them right now, but go into history and history. Okay, all right. Kurt, you might be teaching me something here. Go in history. Go in history. Now, I'm not quite sure what that means. And drag and drop the trade in the chart. So how do I go into history, Kurt? If you could just help. Go in history. I'm not quite sure what that means. So let's see. Is there a history thing here? A history center. Go in history and drag and drop. All right. Kurt, I'll wait for you to give me some instruction on how to do that. That would be really good if we could see the can you look through each? All right. What happened to make it spike? I'm not really even going to worry about that. No, not even going to worry about that. All right, I'm just going through the questions. There's still a lot here. I must apologize. We must probably going to go over time here, but I think it's worthwhile just having a bit of a chat, seeing that we've got the time. Kurt, all right, let's have it. In the account history, in the terminal beside the account tab. All right, so let's have a look. Oh, I hate this. All right. Is it about there? All right, so I'll just see. No. All right, this might be tricky because in the account history on the terminal beside the, all right. Sorry, Kurt, I can't follow you too well. All right, I'll have to move on just to a few other, but I'd really like to find out how you can reconstruct um, the transaction. Um, oh, no, I'm not going to reconstruct it from the values. That's just going to take too long. I think maybe that's what you had in mind, where I could just look where we entered and where we exited. But no, I'm not going to. That's going to take too long. I know that's the way I do my swing trades. I do that. All right, I'm just going through the questions. I seem to have answered a lot of them. Can I check on the higher time frame to see if the trend is down or up? Yeah, you can do that. Certainly you can do that. If you are scared of a big trend, then certainly, oh, this thing keeps on doing that. Then certainly you can you can look at the longer term, because certainly, you know, if you're going to trade a trending market, then you only need to trade trades that go in the direction of your trend, not trades that go against the trend. But don't be too overly sensitive to that. Just be careful, otherwise you'll not trade much. All right, I'm still going. All right, so one of the things we need to look at is the script to clear all the uncleared orders. So I'll go and search on the net for that. And the other thing is reconstructing the deals. Kurt, I think what you mean is just take the information from the closed deals and reconstruct them on the chart. Sitting, I don't think I'll do that now. Drag the ticket number on the chart and you'll see the trade. Take that. Now that's good instruction. Let's have a look. All right, so here's a profitable deal. Let's take the pound. There's the pound. So you take the ticket number, you take it to the chart, and boom, boom. Ah, what a star! My goodness, now I've learned something. There we go. So there's the deal. There's the entry, and there's the exit. Is that, wow, thanks very much. Is that Stephen? Okay, that's excellent. So what we can do now, what we can do is just reconstruct the deals quickly, very quickly, that way. Okay, so there's the pound deal, and as you can see, it I don't know if it would have made it to the target, but we exited on a group basis rather than on a. Right, so let's see. Where's our next? The Oz. Let's see what the Oz is. Oh, that's really good stuff. Oh, I've really learned something after all these years. Okay, boom, boom. There's the deal. You can see it went quite negative, zipped back, and is now consolidating back where it was. And that's what often happens, is the price just comes back to where it was. Let's look at that one. That is the euro yen. This one here. Oh, that's what a beautiful whoopsaw. Or no, we'll look at the euro pound. Oh, this is really, now I've found a nice new plaything. Okay, so again, it spiked out, came back, and we exited. It was probably not optimally, but good enough. Really, well, Kurt, thanks for making me aware of that, and thanks for clarifying that, Stephen, but somehow amongst the three of us we got it done. Let's go and do the euro. All right, very short deal there, up and down, but it just shows you that there's more than two ways to skin a cat. These trades were exited on on the basis that we were almost 100 pips up. So that looks like a bad exit. But if you look at your whole portfolio, that's the thing to do. When you reach a certain point, you just exit and move on from there. So okay, very good. Okay, thanks, Mike. I look forward to that email on a way to cancel all trades. Okay, Stephen, thanks very much for that trick. I'm going to play around with that now. It's really, you know, one of the worst things I found about Forex traders is that they are very bad at doing what I call post-mortems. They actually don't go and look at their old deals. They if it's a good deal, they so happy they forget about it, and then if it's a bad deal, they don't go and do the analysis and say what happened and what should I have seen or whatever. So this little trick here is very valuable for back trading your if you have a bad month or something like that. You go and look and you might be making the same mistake over and over again. All right. Kurt, I actually see I see that's exactly what you also said, so I apologize. I was just a little bit slow. All right. Oh, the four numbers on the screen are when I start trading. The first number is the hour before I start trading. The second number is the 7 o'clock vibration rate. That's the 8 o'clock vibration rate. That's the 9 o'clock vibration rate. That covers 7 to 10, which is our. So I know where we come from, and I know where we're going. Those are the four numbers, and that come from the model. I just basically extracted them from the model. I hope that helps. How do you decide to exit your trades? Very much what happened today. Obviously, a bird in the hand is definitely worth two in the bush. So I basically said, okay, I've come here to make 60 pips. I've made 90. I'm gonna get out now. But if what happened here happened slowly, in other words, it went up, touched the thing, and started going down, I might have had more time to analyze the situation and say, all right, let's, for instance, move the stops closer to where the prices are, and then manage the deals and try and squeeze the optimal exits out of the deals. If it happens slowly, and that sometimes happens, it just sort of slowly waves, and then so you know, this again, you know, when you're forex trading, you should be multi-skilled. You should be able to adapt to the market rather than expect the market to adapt to your technique. But thanks for that question. That's basically, as you can see, it was a reflex thing. I'm up 100. I'm going to close all my deals. That was it. Please show how that's done. Please show how that's done. Mike, are you referring to reconstructing the deals? If you could just let me know. I'm not sure what it is. All right, I think we're almost through the how do you clear those? All right. Right, I think we actually are reaching the end now. Look, I see the webinar is still pretty full. There's a lot of people still in the room, so thank you for sticking around. We did close everything and stop the trading, so we might. I've got this planned, I think, for future for the next couple of weeks. So we'll most probably repeat something on this in this vein again. Right, I think I've actually cleared. But please show me how it's done. All right. So this is something that I've now learned today is now I don't know how you undo this. That's another thing. But so I can't really show you. But it's essentially if you want the deal to be shown on the chart like that, you go to your deal. There's the there's the pound. This is the pound we're in. So you go to your deal, you take that order number there and you drag it onto the chart, and it will put the entry the entry and the exit onto the chart. That's really this MetaTrader surprises me day by day. Yeah, as soon as I know how to cancel all the orders, I'll most probably send that out. And also this indicator here that draws lines every hour. I don't know if you've noticed, but as the new hour happens, it will draw another line, and as it draws a line, I'll also be circulating that pretty soon. Okay, I'm going to be, I've looked through all the questions and appear to have answered all of them. If I haven't, can you please, is an object on the chart, just delete the object. Okay, oh, you can also use backspace. All right, let's just see. Okay, yeah. All right, so that's how you delete it. Thanks. The ordinary way is use backspace, and then it will delete anything that's been placed on your chart. So you can use delete, or backspace rather, backspace, or you can use delete object, and it will delete those. That's how you. Thank you very much. I'm learning a lot. I've learned a lot today. Thank you very much. How do you draw a line automatically every hour? How do you draw a line automatically every hour? This is an indicator. It's a custom indicator, and I will circulate it in the next few days. It's a custom indicator. It's called period separator, and it does it for you. So how much time? In the next 2 minutes, this will create a new bar, and we can sit and watch this, and it will draw a new line. So it's a special indicator. That. All right. It looks like if you all right, there's still some questions coming in. If you haven't reached your profit target at the end of the day, would you close everything at the end of the period and let them run? Depends. Sometimes I close everything. Sometimes I let them run. It depends on the market. You know, if you're in 3 deals and they look like they've got potential, you must probably let them run. Or if they're going the wrong way, you just get out. Most forex trading is situational. There's no black and white answer. You've got to consider all the factors that exist at that time. You know, whether the wife wants to go to dinner, yeah, and then things like that. There's all kinds of other factors that play a role. So, but in general terms, you just look at the deals that you're in and assess their status, their potential. Okay, there we are. It created the new candle as or bar, and has now automatically drawn in that new line. So it's quite a nifty little thing. It's one of our traders from the last webinar sent that through. Yes, we use trailing stops. As I said, if I have time and the deal is activated, I enter a trailing stop, which is half of the target. Oh, do you take the spikes into consideration when using the bar? Yes, most definitely. They are turning points, aren't they? So you would use them, like for instance, that is a spike, and that is, you treat that as the turning point. Because that's reality. The market actually went there. That's reality. How are they entered? These lines, don't ask me, but they appear by themselves. All right. No, the trailing stops. Oh, trailing stop, you would enter. I haven't got any deals going now. Oh, that's interesting. All right, let me open a deal. I'll just open a deal. Right, so there's a deal that I've just opened. We go to trade. There it is. So you right click on the deal, and then there's trailing stop, and then you select. Now just be careful, the trailing stops are in points, not in pips. So let's say I want to put a 40 pip one in. I go to custom and I put 400 points, and that will then create a 40 pip following stop. Now I must just warn you that that's now got a 40 pip following stop. I'm just warn you, these following steps sit on your machine, on your computer. If you switch your computer off, they will stop using. If you go out of the program, they'll stop. They'll stop activate. They stop working. They don't sit on the broker's machine, so just be careful. I've often done that where I've put a following stop, and then for some reason I've closed my trading or something like that, and then the following stop doesn't work. Why is this showing 0? Because the following stop will only activate when you have gone plus 40. Just think about it. It is a following stop, and we've just put a 40 pip following stop in. It doesn't exist until you have gone plus 40. Just bear that in mind. Would you use the top of or the bottom of the spike on the euro yen? Both. They both support. They support. Look, it's all about support and resistance. So there's your resistance, and there's your support. So you use both. Use this. This one creates buy orders, and this one creates sell orders. So you use both. Just go to help and look at trailing stops, and there's a huge discussion on trailing stops which will help you quite a lot. And also just clarify to yourself, 400 points is the same as 440 pips. That's quite important because it can go. The swing high and the swing low are clearly, I mean, surely those are the highs and the lows. So you would put your entry wherever. All right, thanks for that. But the best is to go and trade the system. That's the best one. Is just go and trade it, and make it work. You know, a lot of people buy systems and they say, oh, the creator of the system should have thought of absolutely any market condition, and this system should work in any market condition. Not so. You take a trading system and you make it work. You realize what makes it tick and what makes it profitable, and you now know that if you use 100 or 150 or 200, this could change the profitability of this system quite a lot. So you must go and make it work, you know, and practice it, and all that all that type of thing, you know. That, okay, I think I'm going to have to stop now. And yeah, we've got to clear that out. Delete. Okay. Thank you. How would you do the vibration rate on the euro yen? Let's just have a look. This is the euro yen. Why should it be any different to anything we've done today? Let's say that's the vibration rate. It's very close to what it is. So you would put a pending order there, down, and you'd take that turning point and you'd put a pending order up there. That's the whole way. You see, the good vibration is a very simple system. Find the turning point, don't ask why, or don't even second guess, just do it. Ish. Very good. Isabel, you should ask for a refund from Mary, eh? You weren't supposed to pay. You're my guest. All right. Yes. All right. There we go. Thanks. Could you tell me how to draw the trading red line? That one, Eric. All right, Eric, I'll show you. The line is a trend line, so you click on that and you then go there and you draw it. You can also go insert lines, trend line, and do the same thing. So there's two ways: use the icon or you can use the menu. Sometimes be careful, the lines are set as rays. If they are set as rays, if that's clicked, it will extend forever, literally forever. So unclick that ray, then the trend line becomes manageable. Now, when the trend line has got those three dots, it is active and you can then do things to it. When it hasn't got the three dots like that, it is inactive and you can't do things. Now when it's active, you can move it, and also what we were doing today was you can measure it. In other words, if you look to the right of my cursor, you'll see the height of the trend line is shown, and that's what I use to measure the vibration rate. So I just pull it to give me the height that I want. Anyway, go and play around with them. It's pretty handy tools. Yeah, when yours is long, it's because it's of the ray. Just untick the ray. Okay, well, thanks very much for your attendance and support today, and I hope you found this interesting. And we're going to have lots of other ones. Last week we had a freestyle scalping session. Today we had this one, and we might have a couple more as things go on. Okay then, from me, Alex Aproya and Expert4X, thank you very much, and cheerio. Bye.